Hello and welcome to interest.co.nz. I'm Gareth Vaughan with another of our double shot interviews, and I'm joined by John Bolton, who's the principal of Squirrel Mortgage Brokers and also does a bit of property development. Welcome in again, John. John, obviously based in Auckland, so we're going to talk about all things Auckland property. Look, I guess if we just kick off, we had the latest Real Estate Institute monthly sales figures out earlier in the week. Auckland, the volumes were strong year on year, but the price was down a little bit, not much, but a little bit. What are you seeing out there at the moment?
Price-wise, look, I tend to ignore that. I mean, that's just volatility and depends on what's getting sold in the market at any point in time as to what's going to drive that. There's clearly still a shortage of supply. We're still finding it's difficult for buyers to secure properties. Everything's going to auction. First home buyers generally are disheartened. There's nothing worse than turning up to auction after auction and finding the price goes to a crazy level. But it's still strong, and it's still essentially driven by a lack of supply. So as more property comes onto the market, I guess I'd expect to see sales go up and probably average prices to fall. Because hopefully a lot of the stock that we'll start seeing on the market is actually going to be lower price points.
Just in terms of those first home buyers, you're saying that some of them are pretty disheartened. Can you give us one or two examples? I mean, you don't have to name anyone, but of clients who've really gone through the mill trying to get a first home and found it a real nightmare?
It's every example. I mean, it would be unusual for one of our clients to go out and find a house first time. I mean, the number of pre-approvals that expire and then have to be renewed is really high. I'd suggest that I'd say at least 50 or 60% of our first home buyers will go a full 6 months. And we have to get them renewed before they're potentially buying. So, I mean, that's indicative. If they're going into the market looking to buy 6 months later, we're having to renew the approval. It's pretty hard.
Yeah, indeed. Look, we've obviously had the Labour Party come out with this, this foreigner ban or this ban on non-residents buying existing properties. What do you make of that? Do you think that the introduction of such a policy would actually have much of an impact on the Auckland market?
It's like everything. It's like the LVR restrictions. I think, we're knee-jerking to policy responses without really fully understanding the broader issues, or we understand the issues, but we just don't know how to solve them. That actually has some unintended consequences. Probably one of the big ones is, we talk about this housing shortage in Auckland and the need to build 30,000 houses. Well, how the hell are we going to build them, if the banks aren't giving out money? So if I look at the development market, because essentially we need houses and we need people buying new stock if we're going to solve the problem, we've got the Reserve Bank talking about LVR restrictions, to 80%. How's a first home buyer going to buy off plan for a new development, say a townhouse, if it takes 12 months to build and they've got no certainty over their approval? How many first home buyers buying off plan will have more than a 20% deposit? So we're ending up in a situation where first home buyers potentially can't buy a new property that's getting developed because of restrictions around, lending criteria. And then, so historically, developers have relied very much on foreign investors to buy off plan, particularly out of Asia. Asians are very good at buying investment property off plan. And it's not uncommon for developers to shoot overseas and get at least 50% pre-sale on a new development to foreign investors. If you were to restrict that, or start to make it more difficult for foreigners to invest, how's that actually helping the market as well? Now, hopefully, the talk's been of, policy similar to Australia where they'd still allow foreigners to invest in new stock, and I think that's really important. But if you sort of take a step back, I certainly don't think that that's a big issue. I mean, yes, there's anecdotal examples of people overseas charging into New Zealand, buying up properties and then disappearing again. Fundamentally, I think the bigger issue is just how much capital is floating around countries like New Zealand, Australia, Canada and elsewhere at the moment. A lot of that money is coming from overseas. But it's actually going into the hands of New Zealand residents, and I think it's actually New Zealand residents that are doing most of that buying. And the way I describe it is that it doesn't matter where you come from in New Zealand. The reality is that parents generally play a role in purchasing. So it doesn't matter who you are. I've got plenty of clients who have bought a property and mum and dad have chipped in $50,000 or $100,000. It just so happens that we've got a lot of young people in New Zealand now that can potentially access quite large amounts of money from overseas, from their parents, and that's putting them into a position where they can buy potentially multiple properties. And it's not uncommon amongst some of our clients for that to occur.
And in most of the cases you're seeing, these people have New Zealand residency, so this policy wouldn't apply to them anyway, would it?
Almost entirely.
Yeah.
Pretty much. Probably foreign buyers for us would be, ironically, probably mostly Kiwis living overseas, married to people overseas. We get the odd investor buying from overseas, but predominantly they're buying off plan and they're buying into new development stock. It's not big at all.
And obviously the other big issue we've had of late is this Reserve Bank looking at bringing in loan to value ratio restrictions on high LVR loans.
Yep.
The banks all seem to be preparing for this. They seem to have scaled back their high LVR lending at least a bit. What are you seeing on that front from them, and what sort of impact could this have on the market? You've talked about what it might mean for first-home buyers, but won't these just be easy for people to get around? with second-tier lenders or borrowing money off their parents or whatever? Yeah,
look, I think fundamentally it's probably not going to work, and there's probably there's a couple of, because look, ultimately the issue that we've got is house prices increasing. It's not necessarily, a high growth rate in terms of overall mortgage volume. Sure, it's increased, but it's certainly not out of whack. The bigger problem is Auckland house prices. And fundamentally, the problems are a whole lot of other issues. It's not first home buyers. So we're kind of, applying a rule, but we're not really solving the problem. If you look at first home buyers, there's a couple of things. The first is that we actually have a reasonable pool of buyers out there that actually have pretty decent sized deposits, and quite often that deposit's coming from overseas. That part of the market won't be impacted. There's a number of Kiwis, at the height of the credit crisis, when the banks pulled policy back to 80%, we ended up doing a lot more limited guarantees, or parents providing the deposits and the kids borrowing at 80%. We'll see a switch back to that. So another part of the market will get looked after there. We have a very small second tier market in New Zealand. We don't really have any second tier lenders. We've got a couple with Liberty and with Resimac, both whom securitise out of Australia. That market's never really existed in New Zealand, or hasn't existed in New Zealand for a long time, because the banks have been so competitive in that over 80% space that there really hasn't been the margin or the profitability there for those guys to be in this market. I think the more that the market tightens up in that space, the more opportunity we're creating for securitisation type vehicles and second tier lenders. That's not necessarily a bad thing, and it's not necessarily a bad thing that we're sort of getting more accurate pricing of the risk above 80%. It will potentially, actually, perversely, probably create a more diversified lender market and create opportunities for new lenders to come into the market.
Well, that will certainly be something to watch.
Yeah, so when you sort of summarise that all up, I think what you will see is new lenders coming into the market. You will see parents that can afford to, basically providing deposits for their kids, and you will continue to see capital coming in from offshore that's supporting other parts of the market. So I'm not sure that you're really going to see much of a change at all, and certainly you're not going to see that translate into where the problem is, which is trying to take control of Auckland housing prices.
So you don't foresee them actually coming down much as a result of LVR restrictions?
Oh, not at all. Yeah. Not at all. It's not the problem.
Okay. Look, you've launched or are launching an interesting new online venture, Tenancy. Can you tell us a little bit about that?
Yeah, sure. So we officially launched it today, but it's been available for a while. The website's www.tenancy.com, and that's Tenanse as opposed to Tennessee, which basically, look, it's a cloud-based property management system. It allows investors to look at their overall portfolio, do all of their financial measurements, to budget their properties, to look at their cash flow. The interesting thing is that we've actually got the banks linked into it, so that you can get direct bank feeds, very similar to Xero, which means that you can see all your transaction accounts, you can see all your transactions. It automatically reconciles the rents coming through. So it checks the tenant rents, make sure that they're paid. If they're not paid, it emails the tenant and basically reminds them that they're overdue. And I guess we're getting to a point where you can actually produce a basic set of financials out of the back of the system. So it's a pretty comprehensive one-stop shop for property investors. The interesting thing from my perspective is probably what you can build with a couple of really good IT guys. We've had 3 IT guys working on it for 6 months. What you can build up on the cloud with, not a huge amount of money. To date, we've probably invested about $250,000 in it. And it's staggering just what you can build. It's fascinating from my perspective, and I think you're going to see a hell of a lot more cloud-based solutions coming into the market. And I do look at some of the valuation multiples that seem to get applied to cloud-based companies, Xero being a classic example. And, it's, I don't know, I think that there's a lot of water that's got to go into that bridge. There's not that many barriers to entry in terms of developing solutions into that market. And yet, the market sort of applies massive earnings multiples to businesses like that, and I just wonder, where that value is.
And you've got banks signed up, bank feeds, all the major banks are coming on board? Yeah,
we've got ANZ and ASB Live, which also includes Bank Direct and Sovereign. We're just in the process of finalising the feeds with Westpac at the moment. It's a technology issue, so we're just getting that sorted. We're getting pretty close with BNZ. They got impacted by the earthquake in Wellington, and Kiwibank. So we're not too far away, and we've already got a few of the banks with live feeds in there already.
Yeah. So what do you sort of hope long term for this new venture?
Who knows?
See where you go.
See where you go. But hey, look, it was just something that I'd been sort of thinking about for a good 2 or 3 years, and I guess I've got myself into a position now where I could make the investment, and rather than buy a new car, I didn't want to die wondering, so we threw it into this business, and we'll see how it goes.
Are there many other similar businesses out there at this point?
Well, the New Zealand market's reasonably unique in that the vast majority of Kiwis actually like to manage their own properties. When you're paying sort of 8.5% of your revenue across to a property manager, and you've got good property, good tenants, it can be a bit hard to take, and Kiwis are pretty fast to kind of have a crack at it themselves. I've got a number of investment properties. I manage all my own properties, and I guess I built this solution for me. I want it to be hassle-free. I wanted to know that the rent's coming in but not have to check it every second day, and for the initial communication to automatically go out. As a mortgage broker, I was frustrated with the number of my clients that seem to manage their properties on the back of a spreadsheet and don't seem to fully understand their financial ratios, how much money they're making. So I guess it was a combination of those two things. It was sort of, as a mortgage broker, wanting to develop a solution whereby clients actually have a much better understanding of the performance of what is a major investment for them. And then as an investor myself, just trying to make it easier so that I can manage my own properties.
Well, thanks for that, John. That's John Bolton from Squirrel Mortgage Brokers, and I'm Gareth Vaughan at interest.co.nz.